Welcome to my channel. I'm Dr. Romano. I've been noticing something that I didn't see prior to the extent that I've seen it. Whenever you look for the latest update on the real estate market, you have to look at Manhattan. Investors around the world, they park their capital in the Manhattan real estate market. And what I've noticed since 2019, the high-end real estate market has been coming down. I've noticed a number of townhouses on the Upper East Side. The Upper East Side on Fifth Avenue is Carnegie Hill. Carnegie Hill is an incredible neighborhood, and it is one of the most desirable places that there is. And so when you buy a townhouse there, whether you spend 10 million or 50 million, you're buying a piece of real estate that holds value. However, those prices have been coming down since 2019. And I've also looked at a number of townhouses, and I've noticed that they may have sold in 2019, then they did sell in 2021, and they sold again in 2022. But every time they've sold, they lost about $1 million or more. Well, that means that apparently investors around the world parking their assets in the Manhattan real estate market and thinking that it's going to go up is not happening anymore. Secondly, Billionaire Row, that's Central Park South, those buildings that have been built, those multi-million-dollar apartments, $100 million, etc., they can't sell them right now. So that's also telling me that foreign investors aren't bidding in the American market as they were prior to 2019. You have to ask yourself, well, who were those investors buying up Manhattan between 2000 and 2020? That decade, those 2 decades, it was Chinese buyers that were filling the Manhattan, New York City real estate market with their cash. Those factory owners and those politicians, etc., they would come to America with cash in their suitcases somehow, and they would buy up houses anywhere. And this is a fact that in my neighborhood in Long Island, overnight, you saw that any house that went up for sale, it was bought by an Asian buyer, particularly Chinese. And even in my neighborhood, it became Chinese overnight. Prior to that, approximately year 2000, it was mostly Italian, Greek, and Jewish, and Irish. And if you want to go back in time, in the 1980s, it was the Japanese buyers. The Japanese buyers were buying up Manhattan, whether that was whole apartment buildings, office buildings, you name it. It was the Japanese era. And then in the 1990s, after the Russian collapse, you had the rich Russians come to America in the 1990s, buying up commercial real estate galore, the apartment buildings, the offices, etc. And then of course, from 2000 to 2010, it continued with the Russian buyers that they would just come over with cash and they would purchase these big buildings. Around 2000 to 2010, it was apparent that there were more Chinese buyers in Manhattan. Today, what pushed up the Manhattan real estate market, I believe, were the Russian buyers and then the Chinese buyers. Because the typical American, when they would look at these apartment buildings based on the rent roll, after 2003, they no longer could realize that buying the apartments on 10 times the rent roll was not going to be possible. They had to pay 15 times the rent roll. They had to pay 15 times the rent roll. And at that point, waiting 15 years to make back your capital wasn't possible. You've seen a lot of American Manhattan real estate buyers pull out of the market, and you've seen a lot of Asians come in. They didn't care what they were spending their money on. They just thought that since they did have 50 million, 20 million, that they could park their capital in the American Manhattan real estate market, and that would be a safe bet. So then you started to see that people were buying real estate, investors were buying real estate based on equity. So they were betting that the real estate markets were going to go up, and they were just parking their capital in these beautiful apartments, luxury townhouses, etc., in apartment buildings, office buildings, assuming that the markets were going to go up. Now, of course, in 08 and 09, that was apparent that that was a huge bubble. And due to low interest rates and the government changing things to make it easier to buy properties, that's why we had such a huge market skyrocket. And then, of course, in 2009, 2010, you had even more Asian buyers buying up the American Manhattan real estate market because it was at a discount. You had the Russian billionaires come in and buy gigantic office buildings at a discount. I used to be in the commercial real estate market, so I know what was happening. Today, there's something wrong. It's not just interest rates. The Asian buyers have decreased purchasing real estate in Manhattan. And so there's a major issue in China that's happening now. We may not see that, but I see it in the real estate market. If the Chinese have stopped or decreased buying Manhattan real estate, what is that going to do to the prices? Who's next for the next 10 years that's going to buy this real estate and to continue to make it go up? The question is, I don't think that there's any country in the world that's going to see an economic growth like China did in the past 20 years. And my prediction is that growth is going to come from America. It's not ironic that all of a sudden we have cities decreasing their police budget and interest rates now going up. And then, of course, real estate drops. Is this all a plan? The government is not stupid. The government's very smart, and it's always there to protect we the people. Whether we realize this or not, it's there to protect our economy and our government leadership in the world. You have to remember, our government is a superpower. And they will never let that happen, that they're just going to become the second in the world. Part of being a superpower is also creating debt. The US dollar, now it's going up, so that means that Asian buyers, they have to spend more money for the American real estate market. That's going to be very hard if their currency is already cheap. Because remember, they made their money on the manufacturing sector. So this next decade, I personally believe, and I've been talking about this, that real estate will drop in Manhattan at least 30%. But now I'm hearing, and this is news to me because I didn't believe that the markets were going to drop 50%. However, there's people like Ray Dalio and Warren Buffett. This is what they're saying, and they're predicting this. And this is going to be the biggest economic turning point in history. I know that at this point there's a lot of things that's happening. We have the bond crisis now. When American raises their interest rates to where they are, it changes the bond market. And every time the government changes something happens, and it's a domino effect. So now, with the rising dollar, it's going to be even harder for French, Italian, English, Asian, South Americans, etc. to buy real estate in America. So this next decade, the economic growth, I believe, is going to be you and me buying real estate at a normal price. I've also looked at the office sector in Manhattan, and I've noticed a lot of office space in foreclosure and at auction. How is this possible? Yes, people are working from home, etc. People don't need to be in Manhattan anymore to do business and finance, etc. They could be anywhere in the world or in any state. And of course, anyone logical, you're going to go to a place where there's no state income tax so that you could save yourself $100,000 if you're making $1 million a year. That's a lot of money that you could reinvest. I'm seeing, and this is beyond what I could imagine, that on Fifth Avenue, those gorgeous apartment buildings that have condos there that you could do, multi space, such as office, medical, live-in, etc. Those multi type of apartment buildings, they're in foreclosure, these apartments, and the foreclosure amount is only $440,000. That there is no one to buy these apartments. I could understand it's old, but you just walk in and redo the apartment. On Fifth Avenue, this is incredible. Of course, the maintenance bill is like $4,500 a month for an apartment that's a one bedroom that's only $440,000, and you have to pay over $50-something thousand a year just for your maintenance bill. I could understand that's a lot. But older buildings have a lot of upkeep. And then there's other apartment buildings that it's office space, etc., medical, and they're also in foreclosure in Carnegie Hill. This is just incredible to see this, that Manhattan, as of today, and for the past couple of years, they've seen real estate go down. For 20 years, that barely happened. And you're not going to tell me, with interest rates going up, that those prices are going to go up, that the foreign investors have come to a halt. Now, I could see the Mexican investors come to America and purchase real estate because they're having their own little economic boom based on the U.S. trade policies for manufacturing. So possibly we'll see more Mexican buyers come to Manhattan to purchase real estate. But you have to remember, I don't see them spending $1 billion for an office building or $100 million for a luxury end apartment just to park their capital in. It was apparent that Carnegie Hill became a ghost town overnight. Just like in London, you have a gorgeous neighborhood called Mayfair, and also Belgrave Square become a ghost town because foreigners were going into London and purchasing their real estate, realizing that the real estate market was going to go up. It certainly did. But now, if the Saudis are buying that real estate, who's going to buy in the next decade? So this is going to be a really odd next real estate market over the past next 10 years. And you have to remember, the government is not going to be there to decrease interest rates this time like they were. They're not creating a real estate market bubble anymore. Secondly, they can't lower interest rates like they did in 2009 to help the real estate market. Because you have to remember, there's a huge government debt, whether it's 20 trillion or 30 trillion, that's still a lot of money. To the American government, they will never ever default on their debt. All they have to do is print more money and raise interest rates. That's it. The world will buy their bonds. Because where else are you going to find 5 to 7% return on an investment that is 100% guaranteed? And that's the US government. They will always pay their debt. So there's a lot going on here. It's almost like the everything bubble, as people are saying, between the real estate market bubble bursting, interest rate market, that's the bond market, bursting. You have foreign investors not coming to America anymore because their currency is being watered down because of the US dollar going up. The Asian buyers not coming to America because they're having their own issues. In order for them to grow as a country, they have to continue to take over the world manufacturing markets. However, I think that's coming to an end now. You already have countries like America saying no more, Australia saying no more, and who and where, which countries are going to follow and do the same thing. So you're going to see a major change in Chinese buyers in Manhattan. Thank you so much for watching. If you enjoy my videos, please remember to subscribe to my channel. And if you want to say thank you, do thumbs up. It's right there. Thank you so much. If you have any questions, send me messages to live chat and I will reply back, or I'll make a video just for you. And please remember, if you have friends that want to hear this video, please remember to use the share button. Thank you so much. Before we continue the video, please remember, if you like my videos and you want to say thank you, please do thumbs up. It's right there. Thank you so much.